What's up, everybody? It's me again. It's TradeX. Welcome to my trading den. And today we had an absolute barnstormer of a day. All right, we had an absolute barnstormer of a day. Over 50 handles. We're going to break down everything today. So we're going to break down SIBIs and BISIs and how we use those as support. We're going to look at some standard deviation targets, and yeah, we're just going to go through today's price action and help you build that intuition. All right. Now, before we jump into that, guys, if you're new to the channel, as always, please do consider smashing that like and subscribe, okay? It does the channel well the good, and it also helps other traders like yourself view this content, all right? Now, let's just jump straight into the action. Let's get straight into the good stuff. For those of you who would have been looking at my videos over the last couple of days, you'll know that my overall macro is bullish. Why? Because we have my 3 drives pattern, which I've coined, and I'm looking at this lowest down close candle on the hourly as my order block. So anything, unless price crashes below that, I am macro bullish, all right? And so I don't believe price is going to run below this December chop. Why? Because if we crash through that, we're only looking towards the October low of last year. And if we go down there, I believe, that is my quote unquote concept of hell. I think, life's going to get very, very tough. But I only see us running down there if there's big global news. For example, if Putin does something crazy like pressing the nuke button, or we can't get this inflation under control. Okay, so my bias is that price is going to try and keep us pegged inside this range. Why? Because the Fed are trying to manipulate a soft landing. I'm not going to go into too much detail about that because you guys are here for trading ideas, all right, and trading intuition and ICT concept development. All right, let's go through my analysis for today. All right, I was always macro bullish unless this old BISI got broken through on the hourly. You guys will know I've been talking about this BISI for God knows how long now. It's about the 3rd day in a row, and this is BISI here. This is on the hourly chart. If price breaks below that, I'm bearish. If it stays above it, I'm bullish. What did we get today? Price holding above that BISI, right? Now, I don't care about wicks. Wicks do the damage, body tells the story, right? The majority of your volume is in the bodies, so I don't care about the wicks. The wicks are just stop hunting. Now, if we go down to a lower time frame and we look at a 5-minute chart for a minute, we had this old inverted fair value gap, right? So we had this old SIBI, sell side imbalance, buy side inefficiency, all right? It's now inverted. This for me was the line in the sand, right? Line in the sand. So we had this fair value gap on the hourly, right? This old BISI, and then we had this here. This was where the buck stopped for me, all right? Now let's jump back onto the 1-minute chart and let's break down this morning's session. I'm not going to go through the London session because that was clear and obvious of what happened, but what I am going to do is start here. Now, what I was looking at was that the news embargo that dropped to 8:30, I was reading price and seeing what was happening. What had happened? Price had come up here and swept the buy side and then reverted back down into where? It ran back down into my buck stop, which happened to be where, guys? On the daily chart. It happened to be at consequential encroachment of this wick. And as we know, wicks are gaps, all right? So this for me is a level, and I'm looking for areas of things and price action to show me that it wants to reverse from this level, all right? Now, what had price therefore done? It had come and swept the sell side, which was below here, right? Therefore, in my eyes, price had no reason to run lower unless it was going to run down into a deeper discount. But my overall macro is bullish because I believe this is accumulation to run the market higher for reasons as I've just explained, all right? I'm then looking for entries. And you'll know if you've been on my Twitter, this is where we got in red pill trading, and I called this out live. I got in here. What was I targeting? This imbalance in the pre-London session hadn't been rebalanced, okay? What do we know that price is doing? One of two things. I preached this God knows how many times. Price is doing one of two things. It's either running for liquidity below old lows or old highs, or it's going to rebalance an imbalance or rebalance an inefficiency, okay? If it's come and swept the sell side in what I believe is the low of the market before the market's going to move higher, Would it not make sense, therefore, that price is going to run back into inefficiencies on a higher time frame to go and rebalance them? Yes, TradeX, right? Yes. So what was I looking at? I was looking at this whole displacement leg that happened in the lunch hour, right? And what is price going to draw to as a low-hanging fruit? Equilibrium of that displacement leg, which happened to be here, right? 39.12. What was I looking at for areas of confluence up there? What price is likely to draw back into as an inefficiency to rebalance? This SIBI, this sell side imbalance, buy side inefficiency, just underneath this swing low at equilibrium of the London session displacement leg. All right. Now, price came down here and swept this sell side. This is where I'm getting in because my macro is bullish for the reasons I've just explained. Now all I'm doing is looking to manage my trade. So how do I do that? Let's break it down. I'm going to take my fib and I will find my fib. Where's my fib gone? There's my fib. Here's my fib, right? There's my fib, and I'm drawing across the swing low to swing high, the swing low to swing high before the move, right? This is the low, this is the swing low, this is the high. This is what I'm measuring out, and I'm doing standard deviations, all right? I'm doing standard deviations. Now, I've told you reasons why price is running up here. Low-hanging fruit is equilibrium of this displacement leg. What does that coincide with? 1.5 standard deviation from this swing low, okay? Now, all I'm doing, now I've taken a number of contracts, is that I'm looking for price targets, okay? I'm looking for price targets. And you'll see how many times price respects them, okay? You'll see how many times price respects them. So you can see that this is half standard deviation, this is 1 time standard deviation, this is 1.5 standard deviation. Look how many times price respects it and falls back every time it hits it. To a tick, falls back to a... this actually crashes through it a bit, but ultimately it retraces. This is where you're peeling off your partials, right? And ideally you're looking for confluences. So if price is going, if you've taken your entry down here because you've got the purge of the sell side and your price is therefore going to run for an inefficiency or liquidity above old highs, you're looking for standard deviations above old highs. What did you have here? 1 time standard deviation. That would have been a low-hanging fruit target because it was still in a discount of this displacement leg. And we've already just discussed that price is running into a deeper premium, all right, to go and rebalance this leg. This SIBI here is then a price target, and this was my draw on liquidity for the AM session. And for those of you who are not on my Twitter, go over to my Twitter and follow me. But we broke down these trades. We called this out in live. Well, I called it out in live and everyone bagged off it. It was an amazing day. It was an amazing trade. And then, because we got up to this level, I mentioned, look guys, just hold out, you know, let retail get chopped about in here and let's come back in the PM session. So what I'm going to do is I'm going to run over to the PM session and break you through that, all right? Now, just so you guys know, I'm not paying any attention to Dixie at the minute because Dixie is so... disenfranchised from ES, it's almost irrelevant for me. Now I'm using SMT divergencies across the indices as my relative strength indicator, but today I'm not going to go into that today. I'm just going to keep it purely price action and show you how I use SIBIs and BISIs as my levels of support and resistance, how I use standard deviations to target price, and then what are my ultimate draws, because I think that's what a lot of people struggle with. Now, as you know, I am macro bullish unless this SIBI gets broken through. So again, all I'm doing is looking for low risk entries to do what? Go long. Now, let's jump onto a 5-minute chart. What did we have inside a 5-minute chart, which was inside this old inverted fair value gap, right? Which was also at 50% of this daily wick. We had a rejection block, this 5-minute rejection block. Equilibrium is where price is likely to draw back into before moving higher. What did we get? Price moved back into this rejection block on the 5-minute, okay? Now we're in again, and now all we're doing is managing our trade. Why? Because we're taking sell side in the AM session, right? So all of this sell side, which were below these relative equal lows, have just got purged, right? We've just purged. I've just noticed my camera's died again, so I'm sorry about that, guys. It's just you and the charts, guys. It's you, me, and the charts. Now we're just looking to manage trade. We're just looking to manage our position. That's all we're looking to do, all right? And so you can see this breaker which formed, and it's a breaker which is the low, the high, the sweep of the sell side, test, breakthrough. This highest up close candle is your breaker block in between two swing lows, but one of the lows has swept the sell side. That's your breaker block, highest up close candle. And guys, if you don't know what breaker blocks are, head over to my ICT series and you'll see an episode on breaker blocks. All right. Now, as soon as price broke above, this was now a breaker block that we were looking for price to bounce off of, and we took that trade. All right. Now, what we were doing is we were looking at was it that one? Let me bear with me. Oh, wasn't that one? Yeah, that was it. Looking at targets for where price was running into, and it's the same premise, okay? So it was the same premise in that we had this old sell side imbalance, buy side efficiency. We had swept the sell side, so what was price likely to go and do? Rebalance and imbalance on a higher time frame. No. Higher time frame was this draw up here, right? That was the ultimate draw on that hourly, this old SIBI up here. Okay, that all day that's been my draw, that's been my target. So every time price is coming down into things like breaker blocks, these are springboards to take entries off. Why? Because if you look at your PD matrix, for price to run down back into a discount, it's got to go through a breaker block. And because I'm macro bullish, a breaker block is the line in the sand. So again, this is another entry to go long. But if you got in down here, you were then targeting entries at these SIBIs below the swing lows, because these are balances which are getting rebalanced. So this is managing a trade. This is how you take partials off, right, at these different levels. Now, when we got to here, price obviously ran up into that eventual target that I was mentioning, which was at 62% of this displacement leg. Ultimately, that was the draw today, to come and rebalance this London session move. We got some chop moving in between two levels here, but what was price actually doing? It was painting to retail that price was going to crash down. So all it was doing is engineering liquidity. So all of this is just engineering liquidity. Now what do I mean by that? Everyone up here who's going short, everyone who's gone short here, how do they get out of their position? They have to buy back their position. Okay, so there's lots of buy orders sat here. All of the market makers who have been doing what? They've been buying, right? Okay, they've been buying. And they've been buying down here. All of these legs, market makers, have been buying. What are they painting to retail here? That the market's going to go low. How are they going to sell their positions? Where are they going to go and sell them? They're going to go and sell them up here. Right? They're going to go and sell them up here. So what do we have? We have a match. Because the market has to match sell orders with buy orders. Now, that is, for people who are new, that is absolute gold information, because it allows you to understand how price is moving between levels. People are buying and they have to sell their positions into people who are exiting shorts. So to get out of a short, you have to buy back your position. But if you are long, you're selling into that buy. So this is why price ran up here. Okay, this is why price ran up here. And ultimately, we had a standard deviation, right? So this was the price target that we were looking at. The standard deviation was 1.5. Why did I choose 1.5 standard deviation as my target? And guys, if you don't believe that I took these trades, go onto my Twitter and you can see my exact trades that I took. All right, the exact trades I took are on that Twitter, or on my Twitter. All right, they're there. That's a little tease. All right, so this, why did I take this? Because this is a swing low before the aggressive move higher. That's why. And why did I take specifically 1.5 standard deviation? Because it was above these highs, right? And you're looking for standard deviations above these highs. So what happened here? This was a shakeout. This was trapping retail into believing the market was going to go to hell. But all it was doing was shaking people out before the big move. And so we all got in here off of the what? The optimum trade entry of this displacement leg to move price higher. All right. Now, guys, and what did that tie into? The 350 algo. All right, tied into the 350 algo. Now, guys, that is going to be absolutely everything today, right? There's a hell of a lot of value in that, and a lot of information to consume. I just want to say that Red Pill is currently open. If you guys like the sound of what we're doing, and you are a committed trader who's got a savage mentality, wants to cut out the noise and wants to work with like-minded traders who just want to become exceedingly rich, but also, live for a bigger why than just yourself, then you're the kind of person I'm talking to, and I'd love to welcome you into Red Pill Trading. So it's currently open. Head over to my Twitter, jump into my link and my bio, and you'll be able to find access how to get into it from there. Now, that's going to be it for me today, guys. I hope you had an amazing day, and as always, trade safe, trade smart. Until next time, I will see you on the other side. Take care, guys. Bye.